And November is in the books and on to December as we look to close out 2022. Let's take a look at the stats and jump into what happened to our market last month. Now, on the screen, you're going to see our market dashboard, and this is going to go over interest rates, the supply in the market, and the demand in the market, as we know that you can get a good overview of the market when you compare those three things. So first, let's talk about rates. This is, in my opinion, the shining star of the whole update. We saw rates peak in October and come off those highs in November. So we came down from an average rate of above 7%, and now we're back to about 6.5%. This is due to a very favorable CPI reading in October, where inflation showed signs of slowing down, and the market jumps on that. They are looking for good news. They are hoping to see the Fed strategy pay off and inflation come down. And they're starting to see signs of that. We saw another positive CPI reading in November. And what that means, again, is that we're seeing the growth of inflation slow. Now, does that mean inflation is gone? No. Does that mean that that trend will continue? We don't know. But what we will say is, for now, we're going to reap the benefits of that with lower interest rates. With interest rates coming down to 6.5, we see chances for buyers to at least say, I'm going to go ahead and take action while things are better than they have been in a while. 0.5% is a good amount of affordability that is given to buyers due to these lower rates. And when we look at people's ability to actually buy the rate down, both themselves and with a seller credit, we can see buyers able to get in the fives on their interest rate on these mortgages. And we're talking about far more affordability than we have seen in a long time. Now, that is going to have a lag to it. And we have to remember this. Rates peaked in October. We saw prices go up in October. That rate peak, we're seeing that in the November numbers, and we'll look at that in just a minute. But when we talk about how this rate decline is going to affect our market, really what we're projecting is December and January to be the beneficiary of this. And if the trend continues as rates decline, we could see an incredible start to the year in 2023, as more buyers, we already know, are waiting until the new year to revisit buying a house. And they're going to be met with optimism from agents, as agents are refreshed with new interest rates that are better than they have been in a long time, and more affordability than they have, as we're seeing some price action come down and overall make things more attractive. As we look at supply right here, you can see we've got active listings and average sales price. And then also we're going to use this market balance up at the top to talk about supply. So let's begin here. What you will notice is we are at 4 months of supply, which takes us closer to a buyer's market. Traditionally, something between 4 and 6 months is a balanced market. Anything over 6 months is a buyer's market. And we feel that right now. There's a lot of negotiation happening. There's a lot of ability for buyers to get more out of a transaction than they have in the last 2 years. And so we're continuing to watch that. But when we look at months of supply, that 4 months is a little bit misleading. And we can see that in these numbers below, because months of supply is taking the number of houses on the market and dividing it by the number of closings. And so it's not just how many houses are on the market. For instance, we look at active listings. Active listings were actually down about 2% last month. This is normal for seasonality, right? Typically, fewer houses are listed going into the winter months, into the holiday season, as people wait until after the holidays have passed to sell their house. So we would expect to see inventory come down this way. And average price came down as well, over 7%. And that is the biggest single monthly decline we've seen in a long time. I think that is very much a combination of, again, rates being at all-time highs for the general public. Doesn't count the 80s, but that's reasonably what we've been at. Prices were previously very high. And then also, I think people saying, look, the holidays are coming, let's just wait until next year. And the sales that are getting done are probably sellers that are far more motivated and are willing to adjust that price or make sure that their house is on the market price wise to get that sale done. And so we look at that. I've seen, this is a 1 month shot. I could foresee again sort of a reversal in this trend over the next month or two if rates continue to decline. The other thing we don't know about active inventory is the quality of it. I've heard from a lot of agents that what is on the market, we've got 7,000 houses, but are they good houses? And there's no great way to measure that. But I do think we are seeing a little bit of that show up in the numbers when we have essentially the market slow down and say, look, there's nothing out here for me. We're not seeing a ton of new inventory come on. A lot of the good houses sell quickly, but a lot of these 7,000 houses, how much of those are, I love the term vintage, right? Needing a lot of renovation, a lot of lipstick to make them look good. How much of those are priced appropriately? How much of those are in locations where you've got a lot of buyers actually wanting to live? Those are factors that we can't really see when we look at these total numbers, but it's something to think about and keep in your mind. Now, as we shift over to demand, you can see days on market continued to increase. We're now approaching double of where we were last year. We're at 52 days on the market. This is just, again, showing us the pace of sales. People that are struggling getting a house sold, a lot of that can be due to competitive new construction in certain areas, right? That could be due to the seller wanting 2021 prices, even though it's 2022 and the market's very different. And that's a trend that right now is continuing to be straight up. So we'll see how that goes. But if we do not get fresh inventory on the market, it's not hard to think that days of inventory or days on market is going to continue to rise because you're going to have a lot of the same houses sitting on the market for longer and longer and longer, pushing that number higher. And when we look at closed sales, this is a big deal, right? 24% decline compared to October, under 2,000, actually down to about 1,700 sales in November. And this echoes what we've been talking about for the last several months. We are at a greater risk in this market of a grinding halt where transactions just slow down and even stop, more so than we are at a risk of waking up and suddenly having 12 months of inventory and prices hitting the floor. Now, we're not going to stop, right? We're not going to have zero transactions. When you go back to 2008, we were still having about 1,000 transactions a month, which tells you that in the worst of times, we were still having 1,000 houses change hands. That's because there's a lot of business for estates where someone's passed away and they have to sell the house. Military orders. We're a big military town. We got a lot of people that are coming here on orders that have to buy a house potentially, as well as if they're moving away due to orders, they're going to potentially sell that house. Also, job relocations. We've got a lot of people relocating here to come work. And so they're going to be making transactions even if the market's not as ideal as possible. So there will continue to be some amount of movement, but this is a lot less in terms of transactions than we have seen in a long time. And we feel that in our business. But I know in general, all of us on the front lines have felt a pickup, and that is going to be, in my opinion, directly related to the rates coming down and the awareness that the average consumer has of that as they're paying attention to this. So I would expect to see closed sales rebound. Usually in my sort of experience, November and December, one of those months is usually really good and the other one is pretty quiet. I think we're on pace for a December that's going to outpace November. And so we'll have to watch and see. So with that, we have a good overview of where things are going and what to watch for in December. And we'll be back with a December update as well as an overview of the whole year and to do year-end recap. Now, if you have not followed us on Instagram, you should definitely do that. We have a lot of extra graphics that we're publishing there. And excitingly, in 2023, we're going to be launching a premium membership for real estate professionals looking to get more research, more insights, more resources they can share with their clients to help them navigate this market, as well as to tap into a community that we're going to be building that involves live coaching on these updates, where we'll go through and answer a Q&A, as well as being able to mastermind and discuss what's going on with top agents in the market. So look forward to all of those updates in 2023. And, we hope you have a very Merry Christmas, and we'll be back with the next update.